Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Monday, start of a new week, a new template, and just going to run through the charts, my view of what I saw today, my trade on the NASDAQ, and just reinforcing some basic concepts. Start of the week, I come to the screen in the U.S. session. We've had two large days on some of the instruments after the Fed and then non-farm payrolls on Friday. So there were opportunities in some of the earlier sessions for traders on different instruments, but coming to the screen for the U.S. session, I made notation on the community page that there was first red day on S&P and NASDAQ, but also recognizing that we're up high and that this is also the third day from the peak. So obviously the peak was formed on Thursday after the Fed pump up on Wednesday, and then we had the pump to the high on non-farm payrolls, and then the collapse into the end of the session, which ended as a first red day and also an inside day on the NASDAQ. So thesis being for me, just in being in line with keeping things simple, was we've already broken the low of the day, so we have breakout traders triggered into the market short, and that lower low, lower high then becomes our break instruction on the inside. The only thing I can look for in any day and any given setup is either a pump and a dump or a dump and a pump. So marking off the levels, that was my approach, and we'll go through the other charts to identify the lack of clarity for me. Now, on this particular pair, coming back to some simple stuff, traders mentioned that this took longer, and all I ever do with trade setups is think first hour, second hour, third hour. So when the New York session opens 9:30, I'll just address a quick question from a trader regarding a NASDAQ trade opportunity they took in the London session. I only ever look for trades on the U.S. indexes in the U.S. session itself, so I can't answer that. I just have one approach, and that is for those markets to be traded in the U.S. session. There obviously are trades. I've taken trades in London before when I was living in Perth. But for simplicity's sake, obviously those are U.S. markets. They will move when the U.S. session opens, as they always do. So coming back to the thesis was first red day. Even though we're third day, the understanding with that is that if you do sell high on a day 3, back to the low of the day, that is where the trade could end. And as I always reinforce, I am not here to hold on to something in hopes that I get all kinds of pips. I'm just looking for a trade opportunity to take and be done with. And this was a perfect textbook example of a high of a day to low of session opportunity. Took out the lower high of the London session. We've broken out of a 100 pip box. First hour made a high and a low. There's no major red news on the calendar, but obviously we go to work when 9:30 comes on board, and what we're looking for is them either to be breaking out of the low and reversing if it's that opportunity, or pumping up into the high for the dump. And this was a textbook opportunity. I didn't find that the S&P was as clean, and we'll look at that in a moment. Oil, I found that it was, although it pushed up from the low of the day without breaking out, so again, we look for faults or failed breakouts at the lows of weeks outside of ranges or at the highs of weeks outside of ranges. We'll talk about that one also. But just didn't behave as clean. So again, perceiving, although it moved, it was an escalator type of opportunity down, whereas I felt that this particular opportunity, because they trap volume higher above the 100 pip box, there's our micro RM structure right into the new hour, the third hour. So New York opens and breaks to the high. The first 15 minutes breaks structure, locking in our M pattern for a close above the 100 pip box in a move back through the low of the session. So that was just a bit of patience, but again, with those indexes and oil sometimes, first hour, second hour, third hour. New York opens in that middle hour, and that's the sort of mentality that I use. It's about the time of the clock. It's the clock. It's not about necessarily staring at price. until this market opens, I know that there's a high probability that when it does, it's going to break to the high or to the low. So this was a fantastic opportunity. Not real confident on any of the other setups. Nothing super clean, but I felt this was a basic 3 levels of rise, high a day, broke the 100 pip box, took out the lower high of the London session for a fast explosive move to the low of the day. Now, looking at gold, again, we had our day one at the high of the week last week and the high of the year, the high of the month. Day one, day two. We're on day three, and this is a great reference, similar to oil. Again, thinking we're trapping volume above the previous low of the day. So we are 3 levels of rise, potentially back up. We're not outside. We don't have trap volume outside of the low of the day. We have day 3, but we haven't had a breakout day. This is an inside day. An excellent question from a trader. Regarding an inside day, the only thing I can ever do is work from the high and the low of the day. So we have a break in structure. There's a possibility that the high of the day may be locked in, lower high, lower low, drawing the lows, and then obviously this for me was not a textbook opportunity, but we'll look at how I would assess that going whenever there's an opportunity. Once I have a thesis, then I go to my smaller time frame and my numbers. So as I mentioned, we redraw our highs and our lows. We have our lower high of the London session. That becomes the new lower high of the day. So coming back to numbers, another great question from a trader was, why didn't I include the numbers in the playbook? And the main reason was that it's another variable that traders can get lost into following, because you either have a textbook best trade setup, and with our universal 5-minute entry criteria, the number boxes are irrelevant if you have the setup. And so if we go back to the 5-minute chart, our universal entry criteria was met right at the beginning of the third hour on the first 5-minute candle close. So again, we have lower highs, lower lows in a broken down market with an overall thesis of a downward moving market. So it's a day 3. The only thing we can do, because we've moved away from the low of the day and broken structure on the inside, lower highs, lower lows, and then we wait for the pump up. First hour puts a low in place, they pump it up, second hour pumps into the high, the third hour opens and engulfs for an easy 50 pip collapse. Now again, I down low day 3, I didn't think it was as clean as the NASDAQ. Really, they both ended up the same type of trade situation, pump and dump for the move back through the low. Now this market still has not taken out the low of the day. It's still an inside day. I know some traders have said that it broke the low. This is still technically an inside day. It's a narrow range day. We don't have any breakout traders outside of the low of the day in this setup. But that's the simplest, easiest way to approach this, is just mark off your highs and lows. Spot crude, we had breakout traders in the market from Friday's collapse after the failed breakout at the high of the day. So again, I mentioned that potentially could be a break in structure. And on the inside, we've already got day 3 breakouts in the market. So you'll notice that on spot crude, we're contained inside of a 100 pip box. They made higher highs and higher lows. And I made notation that we're basically in a 150 pip box. But as soon as it breaks that high of day, we're either going to get a parabolic short squeeze opportunity, which did not present, or we'll get a failed breakout, which is what eventuated heading into the second hour. Our second hour opened up and broke structure down. We had already had a break in the front side of the move. That created a break in structure, lower highs, lower lows, and then the pump up into the New York Open for an engulfment right at the New York Open at the top of our 100 pip box for a move back down through the low of the day. Now again, I was already sort of focusing on the NASDAQ at this point. I wasn't entirely convinced that crude was going to set up ideally, but it did. Eventually it just broke down, pumped back up for the New York Open collapse back through the low of the day. So again, coming back to our 15-minute chart, we now have a market that has broken out and pulled back. No idea what this market will do. We'll have to see at the close. Still not a green day, but we potentially may have a failed breakout at the low of the week. We have higher highs, and as I mentioned with Friday's higher high, we have a higher high in the U.S. session. This could be the beginning, perhaps, of a dump and pump situation heading into day 2 after our opening range for the week. No idea. We'll take a look tomorrow. The euro, I mentioned to some traders, we're day 3, but we're still on the front side of this move. We have lower highs, lower lows. A breakout of the Asian range, you'll notice again just with our number boxes, this is a 25 pip consolidation that breaks down in the Europe window, and that sets it up for a pump and dump into the US session. Just pumping it up, quarter level as a reference level, 3 levels 75 for a sell-off in line with the existing short trade. So again, I always reinforce the fact that just because we're down low on day 3 does not mean that we're going to get a parabolic short squeeze or anything else. And that is a specific trade setup. So we're still on the front side of the down move. Monday opens our range for the week, our high-low for the week. We have breakout traders in the market at the beginning of the week. We've taken out the low of last week. So we just go from there. Traders who are going to trade the euro, again, trading with the trend, pump and dump, for the continuation low-hanging fruit trade in the U.S. session. Again, the pound, day 1, day 2, day 3, a high of day and a low of day. We're in a downward move. If we have lower lows in the gap time, the break in structure, that is the formula for the pump and dump. Now, in this particular case, if we go to our smaller time frame, traders got in early, obviously. If they did not take any profits on the New York Open, they pumped it up into the first mouse. That was at our lower high of the day. So we've locked the high of the day in. You've heard me say first hour puts a high and a low in. We have our high of the day potentially locked in for the U.S. session. They pump it up on the New York Open for the high of day short trade opportunity just underneath 75 at our quarter level where they've locked in the high. So again, 3 levels in our 100 pip box for a high of session New York Open short trade back in line with our already broken down market. Japanese yen, I'll just mention something before we go over this pair. Some traders have talked about their platforms freezing. I will say this, that if you have multiple charts open with multiple indicators and they go back for several days or several weeks or months in terms of including the indicators, that can bog your system down depending on the type of CPU and memory, etc. that you have on your computer. So I often, whenever I narrow down to 1 or 2 charts, I have a hot list page that I only have those 2 charts open. And I only have that day's data on there. So in terms of the numbers and levels, I'll only include it to when I go down to a smaller time frame, for example. I only have it going back a few days so that it doesn't eat up a lot of memory or data. And I very rarely, if ever, have a freezing problem. Just something to consider if you're having that issue on an ongoing basis. So coming back and looking at our chart, day 1 on Thursday, day 2 payrolls, day 3 we're up high. We've taken out, if we just zoom back out a little bit, taken out the high of last week. We have some higher highs from the month of January, but this market is still moving higher. Now, when I looked at the yen, I thought it's possible that we could get something up around 75 if this market continued on the front side up top and then broke structure heading into the New York Open. That did not happen. And again, as I've talked about on a day one runner, it's broken out on the open. This gap is essentially a big bull candle, breakout, pullback, continuation. Don't look to counter trend a day one runner. This is a breakout market and it's continuing to go higher. So we're still on the front side of this move at the beginning of the new week. Day 1, day 2, day 3, possibly we'll get something. We have a gap in this market. But at this stage, there's no indication of a reason to be counter trending this pair. For traders who were looking to continue the move, there's an opportunity right into the open of the session for the low-hanging fruit continuation long trade. But again, for me, wanting to buy up high on day 3 wasn't my favorite choice. I would be more inclined to see it go up and topped out for at least a 25 to 40 pip reversal, possibly back into the breakout from the London higher high. Same thing with the Swiss and the Canadian. Both are still on the front side, moving strongly up, although we are now sort of contained on this third day, but no ideal textbook best trade setup. Didn't even really spend any time looking at this pair. Canadian dollar, again, still on the front side. Question from trader, why wouldn't I go long? If we look at the Canadian dollar, again, similar to the yen, continuation trade on the front side of the move. Nothing wrong with this at all. Again, my focus was kind of on the index, but this was an excellent opportunity for a low-hanging fruit continuation trade. You heard me say this many times in previous videos. If they move it before the session starts, okay, they dump it down before the session starts, we're on the front side of the move, get suspicious that they're not going the other way. They dump it down before the window starts. That's the dump and pump setup in line with the existing trend into the third 15-minute candle. This is a 5-minute chart, but that is the beginning of our new 15-minute candle at the half-hour mark, and we're at the bottom of a 100-pip box below the quarter level in line with that existing long trend thesis. Although a little bit of an escalator, this pair obviously is given a nice collapse at the end of the 3-hour window, but that opportunity in the original direction still gave traders 40 to 50 pips long. S&P, again, similar to the NASDAQ, we talked about the first red day that occurred on Friday after payrolls and the dump into the close, and the breakdown this morning through the low of the day. So that lower high, lower low were the reference levels for a potential pump and dump if it eventuated. As one trader said, are we looking for shorts? Adam, great question. I don't ever like to say I'm looking for shorts because that means you're biased that you want to short the market. I always believe in looking, is there a high of session, high of day selling opportunity, aka pump and dump heading into the open of the session. That is what I'm looking for. That did present on both pairs. I thought the NASDAQ was cleaner. But the reason I say that is because sometimes traders will think, oh, first red day, immediately I need to be shorting this market. And that's not the idea. The idea is to be selling the high of day, high of session, shorting opportunity in the pump and dump scenario. Because shorting something can get people chasing a move or chasing momentum. And coming back to timings, New York Open, 9:30, we're looking for the pump and the dump. And on this particular pair, again, similar scenario to the NASDAQ. The New York Open pumps up into the lower high of the London session and then breaks down. So coming back to timing, I don't get so much focused on price. Obviously, even here at 50, 75 pip scalp right off the open. But I think more in terms of time, first hour, second hour, third hour, because I always expect in most cases, unless we get some kind of 3-day parabolic setup, is that the second hour will trap traders on the open at the 9:30 New York Open into one of the extremes, and that forms a long squeeze, which is exactly what we had today, or a short squeeze. And if we're in a parabolic setup, that will typically be a breakout pullback continuation model that will not come back, and sometimes that can coincide with major red news. So very similar pattern. We have a 100 pip box. They break out. They pump up into the lower high of the day, break structure, and then the new hour starts and they pump it up, 1 push, 2 push, 3 push engulfment, same timing as the NASDAQ, the breakdown to the 100 pip box for the 150 pip collapse. You'll notice again 3 levels of drop, not from high to low, but from where the move starts. We lock in double zeros and they drop at 150 pips. They take out the low of the day in reverse, and that is our 50, 50, and 50. And then they've gone and done the same thing in the long direction. So opportunities for bears, opportunities for bulls, but coming back to first red day, high of session shorting opportunity, more so focused on the timing. So we get our break in structure at the New York Open, and then the pump, think third hour. First hour locks in a high and a low. They haven't hit the stops or hit the low or high of the day. New York market opens, breaks the new formed high of the U.S. session, pulls back and jams traders up into that peak formation. New hour opens. We have our M structure, 3 pushes. Engulfment, consolidation for the collapse of 150 pips. So again, on a Monday, a cardinal rule of thumb for me is you want to look for something that's super clean. And what you really want to focus on is starting the week off as clean and super powerful as possible. You don't want to do anything that's going to get you into trouble in a market that's potentially not ideal or not crystal clear, and then start your week off on a bad note. So as I mentioned earlier in the community post, new week, new template. Monday sets the opening range for the week. If something doesn't look clean and simple with a best trade setup, save your bullets for when it does present, because one high quality best trade setup will pay bigger dividends than 10 low quality, low probability, stressful piker trades. There will be plenty high quality, high probability best trading setups this week. There always are. And that's the truth. So coming back to our simple approach, I know some traders may find some of this frustrating, but stick to what you do well. If you don't have a setup that you've traded before that was easy to make money on, then just be patient and wait, because the last thing you want to do is damage your financial capital or your psychological capital, especially at the beginning of the week. And then, we could get to the end of the week and have 2 or 3 absolutely simple textbook patterns. And you'll look back and you'll kick yourself, especially if you've been trying to play catch up all week on being underwater on a poor quality trade setup on a Monday. So start the week off strong, traders. Keep it simple. Get off the screen, come back the next day and repeat the best trade setup process and end the day on a positive note. Get out and enjoy your day. Keep it going, keep it growing, and may the markets go with you.